Hey guys, Mike here. So another jam-packed video for you, and we got a lot to cover. So I'm going to update you on what happened with First Republic Bank, all the details on that. Also, some economic data that came out. It's important to know. And also, two other things. One, which will make the Fed's job really hard if it plays out, and it's kind of surprising when I saw the data this morning, so I figured I'd show it to you and get your opinion. And the other one is there is a divergence happening between the bond market and the stock market, which we need to pay close attention to, which means I will keep you updated on it. But I did want to start with this. I mean, these are crazy times, right? And I never thought I'd see these stories popping up again, not this soon. But here we go again, boy. Here we go with the meme coins, altcoins, whatever they're called. And you got this new one that came out 15 days ago, and it already has a $300 million market cap. And I guess as a trader, he put like $3,000 into it. It turned into like $3 million. I'm definitely curious to see. I mean, it's just one of these ones that rockets right up, straight up like a meme stock or a altcoin would. And my question is he able to get his money out? I forgot what was the one called last year where nobody could get their money out because it was a scam or whatever. And put in the comments if you can remember what that one was called. But I did find this one funny. It was a meme that popped up on Twitter and stuff, and it was, Dogecoin used to be #1, and you got here is Pepe or however they say it, saying, "Sure, Grandma, let's get you to bed," right? Because that's like the new thing now. And so I just thought that was hilarious, and I didn't really think I'd be seeing those kind of stories right now, but they're starting to come back. There's another one out there too is doing the same thing. So now, First Republic. Shocker, JP Morgan won the bet. I don't believe it. I suppose it was a fair, deal or whatever, how this happened. But again, you got the largest bank in the world getting even bigger now, right? Or largest bank in the country. I don't know if it's the largest bank in the world. But so what they did was they're going to end up acquiring First Republic. It'll generate a one-time gain of $2.6 billion. They also expect to make over $500 million in profit per year from the acquisition. This is my favorite part. On top of this, the FDIC is covering $13 billion in losses and providing a $50 billion in financing. That's kind of, I've read something about that where it's kind of just a trade-off for them or whatever. But I did enjoy the part where they literally basically cover all the debt for them and they get all the goody stuff, right? So that's amazing to me. Now, FDI is signaling that they may think about increasing deposit insurance for businesses. Those are usually the ones that are over $250,000. We'll have to see on that right there because so far they have paid out a lot already this year. And of course, this led us to our friend Nikki Leaks here. Now we got the FOMC meeting coming up. He came out and said the Fed is set to raise interest rates to 16-year high and debate a pause. And what they're really trying to figure out is how they're going to craft this, because they realize once they say, oh, we're not going to raise rates anymore, what do you think the market's going to do? Most likely go parabolic, right? I mean, maybe you get your blow off top, maybe it just keeps going up, whichever camp you're in on that one. And that's going to be a tough one for them because they don't want, again, you don't want the market going crazy. They don't want the market going crazy, okay? That's just not the way it works. And we'll get into in just a minute about what I was talking about. If this part of the market goes crazy, it's going to make their job that much harder because we've already seen, core is sticky, all right? Core CPI and stuff, and that's what they're trying to get down. And so that's going to be a huge, debacle or whatever. But I did find, anybody put in the comments, like, do you really think the whole deal with all the bids coming in that JP Morgan just happened to win the bid? I mean, you had other banks in there trying to get that as well. And they step in and give it to JP Morgan like they need, more assets and stuff. And then the FDIC taking on all that debt. Really? I mean, that's a pretty good deal. I mean, I don't blame Jamie Dimon then. That's a great deal. Here, take all the good stuff. We'll take the bad stuff. Why not, And there's, some liability obviously in there for them. But I just find it funny. They're the ones that win out of all the other banks. Like, okay, sure, wink, wink. Fair bidding process, they said it was. But anyway, I'm just curious to get your comments on that one. Now, the manufacturing PMI we talked about, well, guess what? It came out. Can't believe it, but we're still showing contraction, right? So it was like 6 consecutive months now. We've seen this. The two things I took away from this report more than anything else, which may affect the Fed's decisions, is the price index registered 53.2%, up 4 percentage points compared to March figure of 49.2. That is not something you want to see up. And then you also have the employment index elevated into expansion territory, registering 50.2%. So that was up. So again, hot job market, prices starting to come back up. That's not what the Fed wants to see. Now, good news is, and maybe this is good or bad, I don't know if the Fed will like it or not, but our personal savings rates continue to tick back up. It got to 5.1%. And so I guess, what is it, the last like 4 or 5 months, this thing has been ticking back up. And so I'm not sure, honestly, if that's something the Fed is going to want to see or not. But that's how we're able to keep going on all these vacations and everything else. And before we continue on, if you can just hit that like and subscribe button, I sure would appreciate it. It helps out the channel a lot. And if you like this kind of content, don't forget to hit that subscribe button. It's very important for you to get notifications when these videos come out. Appreciate it, guys. Now, that leads me into the part that when I looked at the data today, I was really surprised. But, you know, let me know in the comments what you think. But if this continues to trend up, it's not going to be good for the Fed. It's not what the Fed wants at all. And it's real estate data, right? So this comes out, big report comes out, and you can see, you know, it said, hey, there's a housing recovery on the horizon here, right? Which is surprising just because of the prices and the interest rate people are paying. But you can see traffic of prospective home buyers starting to improve, likely driven by solid employment growth, high wage growth, and plenty of excess savings. And you can see it's starting to tick back up, right? And then we go over here, home sales starting to recover. And if you can see total existing home sales, new one-family houses sold percentage, you can see both are ticking up, curving back up, right? And then if we go over here, this one right here, this one really surprised me. This was average number of offers received per sold property are starting to recover. So it's not just like one person walking in. There's actually, I mean, it's basically what, went from 2.25 to almost 3.5, which don't sound like a lot. And you can look right here, which is just something we've been, I think, baffled by for a while. This is the largest home builder in America. I think it may be the largest home builder in the world, D.R. Horton. And it's going for a new 52-week high. It's up 87% over the last year. And if you happen to be in TradingView, because when I saw this today, I looked at it, I said, isn't that a double top right there? And if you ever wonder if you're correct on this, sometimes this works, sometimes it don't. But if you're in TradingView, I don't know about others, you just type in double top or any kind of pattern you're looking for and click on it, and oh, look, there it is. So we'll see if that rejects and comes back down. Just as a side note, not important, but just happened to notice that when I was researching the video today. And then you see, you know, the iShares U.S. Home Construction ETF. It's not a new 52-week highs. I'm sorry, not 52-week highs. I'm sorry, new all-time highs. I'm sorry, new all-time highs. Let me correct that. But it's only $6 off. So it's heading in that direction. And the reason why this is extremely important is because what makes up the hugest part and has the biggest changes month to month, especially when it comes to core CPI, is what? Shelter, right? So if home in our area, in all state of Florida, prices are ticking back up again, which surprises me. My neighbors are talking about this, like, can you believe this? They're going back up again. And so I know in other areas, but in certain areas, I think Arizona I saw where they're not going up, they're actually going down, if I'm not mistaken, on a report I read. So certain areas that do come down, but you can see, I mean, the data's starting to tick back up, and we always ask in the Discord, like, who's buying at these prices and these rates? Well, I just so happened to go to a house this weekend. The person paid almost $2 million for the house, you know. Again, right down the water, beautiful house, nice person who bought it, you know, but didn't phase them a bit to be paying, you know, 5 to 6% on a $2 million house. Didn't phase them a bit. People moving in our neighborhood, you know, it's just people are going to do it. If they want a house, they want a house, so they're going to buy. It is what it is. So we'll see if that continues up. It can make a problem. The only thing why it might not phase it is because what drives us nuts about what the Fed uses is it's outdated data, right? When it comes to shelters, who knows how long this will take to even filter through when it comes to the data they're using. So, you know, but it is something to keep an eye on. Now, the divergence I was talking about, something else we talk about here, the HYG and the SPY used to bring us up a lot. I'm going to start tracking it a lot more now because it's important. Obviously, HYG, you're talking about the bond market. SPY, you're talking the stock market. Which one leads? It's usually the bond market. The reason why is because the bond market usually is less manipulated in a way, and it's way bigger than the stock market, by the way, if you don't know that. And you can see HYG obviously heading down, and what's the SPY doing? It's going up, right? And so I don't find this to be a coincidence that we have an FOMC meeting coming up this week where we're expecting to raise rates again. But the biggest thing is going to be, obviously, are they going to pause or even announce a pause? And so we'll keep that. It doesn't always play out, but when it does, it's important to be aware of it. Now, some of the stocks, I'm going to cover two of them today. NVIDIA, we talked about this. Is this accumulation or distribution? Well, guess what? It must be accumulation because that thing busted out, was up over 4% a day, even though the indexes were flat or red, right? And is that a bullish MACD cross I see down there at the bottom on the daily right there? I believe it is. And so I know when people talk about, hey, you know, you sure you don't want to short this thing? I'm like, when it hits that bottom trend line and breaks it, I'll be more than happy to think about doing that. But until then, nope, sorry. Because this is just one of those stocks that's broke away from reality, right? You know, it doesn't matter what any of the metrics are, it just don't matter. And so I was looking for that trend line right there, or the port line, excuse me, you know, to break. And until then, there's no way I was going to try to short this thing. You can see that's what's happening, right? You know, on this shorter time frame, the hourly here, you can see is way overbought. Looks like the magazine wants to roll over. So we'll see if it comes back into that range it's been in since March. But today it got pushed way on up there, and it doesn't have earnings for at least a few more weeks. So, you know, keep an eye on that. And with Meta, the only thing most people care about is which gap's getting filled, the one right here or the one above it. And it keeps teasing everybody. It keeps going down in that gap. Usually during the day, people say, this is it, I'm going to start filling that gap. And then it goes right back out. Big money starts pushing it back up. Dip buyers come running in. So, you know, put in the comments which one you think is going to get filled first, because it's right there at both of them. I mean, big 17% gap right above, or is it going to be the gap right below it left during earnings? And understand what they announced today was they're going to take another bond issue out. It's going to be $7 billion. And so what they're going to do with this right here is they're going to use it to finance capital expenditures, and watch this part right here. That's why the stock went green. Repurchase outstanding shares of its common stock. And of course, they're going to do acquisitions. But the most important part is the purchasing of the stock. That's what big money cares about, right? That's what pushes these stocks up, not fundamentals. And if you can see right here, if the NASDAQ is going to continue up, I would think something's going to change. Because this right here, the NASDAQ composite at the top, the NASDAQ composite index with percentage of members with new 24-week highs are down below. And you can see how, you know, especially going down, believe it or not. So as the NASDAQ's going up, or at least trading sideways, that number's going down. You can see right here, when it went up right here in 2022, you saw the big move up, right? And you can come over here and you see when it was going up right here, what was going on down below, you saw a big move up. And so it's just kind of strange to see what's happening right now. And so this is the big debate on the breadth of things, and the new 52-week highs and all this other stuff that's happening. You would think that has a change. So now earnings, we're going to have a boatload of earnings come up tomorrow. You're going to have Uber, Pfizer, BP, Marriott, Marathon. So pay attention to those right there. AMD will be an important one because it's one of the big top 10, right? It's been moving this market. That accounts for 88% of the move on the NASDAQ. You'll have Ford, and then Starbucks keeps setting new 52-week highs. And I totally missed Caesars down there, by the way, at the bottom. So let's see what they got to say. And if you're betting on earnings, it kind of reminds me of this meme right here.
Yeah, I'd like to bet $100. You want to pick a team? No, just take it.
Because that's pretty much what it is when you're betting on earnings. So, you know, I find a good laugh on that one. Now, economic data, we're going to be looking at the big one, JOLTS job quits and JOLTS job openings. We're expecting a decrease on this, so make sure you pay attention. I think factory orders month over month, they're actually expecting 1.3. Prior was negative 0.7. Total vehicle sales, maybe we'll see. That'll affect car stocks and stuff, which of course Ford's reporting tomorrow. And so those are just some things to keep up to date on, which means I'm going to be the one keeping you up to date as much as I can on those. And I appreciate all your feedback from yesterday's video and the thumbs up and sharing and stuff. It always helps the channel, and I really appreciate that. So if you got anything out of this, hit that like and subscribe button, guys. I really appreciate it. And I'll see you tomorrow.